Let's revisit the interest rate forecast. So, a month ago, we thought that rates were going to come down, 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 down. And now I'd like to revisit that. So just recently, the labor force survey came out, and this is the most watched data that's released by Stats Canada, and it has the greatest impact than anything else to move interest rates. So initial numbers looked really great. We saw 58,000 more jobs, full-time jobs. The unemployment rate was down, and we are working more hours, more full-time hours. So that's good news. So what looks like an overheated market, even though interest rates are up, it's no reason why the bond yields have spiked higher. So remember, the bond yields drive fixed rate mortgages. So there's a couple of nights this week where I worked late to get those mortgage approvals out before the rates, fixed rate spike. So remember, everything that we're seeing with the labor force survey is good. And, because of that, bond yields are spiking, because instead of an economy looking like it's like sputtering, it's actually booming under the high rates. But let's take a closer look at this. And I wanted just to thank Edge Analytics for some of this information. So if we take a deeper dive into what's really happening, there are a couple of weird things in the labor force survey. So more people over the age of 55 are working. The unemployment, the employment in the public sector is increasing, but seasonally adjusted wages are weak. So again, and the other thing that's kind of underlying in all of this is the private sector payroll. So private sector payroll, you know what that is? That is actually having a negative trend. So what are we seeing with interest rates? Well, instead of rates going down, down, down with fixed rate mortgages, we're seeing them hover between 4.5% and 5%. And they really haven't adjusted a lot in the last 6 months. However, on the variable rate side, again, the Bank of Canada has lowered its overnight lending rate, which is impacting fixed rate mortgages. We're still seeing variable rate mortgages at prime minus a half or prime minus 0.85. So many of the financial institutions are changing the discount off of the prime rate. So remember, today's prime rate is 5.45%. So you're getting on a variable rate mortgage somewhere between 4.95 and 4.6%. So here's a couple of recommendations for you with your mortgage. If it is coming up for renewal, you will likely have a payment shock on that. Some people are experiencing maybe only a couple $100 a month. I've had some where it was $400 or $500 a month. In those cases, what we are doing is we're re-amortizing the mortgage to stretch it out just for a little bit of a longer time, just to kind of give people some payment relief, especially if they have car loans or credit cards or lines of credit. So again, it is super easy if you have a mortgage with one of the top 5 banks, so like RBC, TD, Scotia, BMO. The way that they register mortgages is based on the collateral charge. And because of the way the mortgage is registered, you can adjust the amortization quite easily. So if you were down to a 10-year amortization and it makes sense to stretch out the mortgage to an 18-year amortization to lower that monthly payment and still get a good rate, that is quite easy to do. I also wanted to mention that we are still in a buyer's market, especially in Guelph and the surrounding area. So if you are looking to purchase a property, make sure you contact us early. We'll go through a couple of scenarios. It is especially interesting if you are buying a property under $1 million. And most first-time home buyers are, because there are specific interest rates, even if you have 20% down or more, that are better because we can back-end insure the mortgages so you don't pay the default insurance premium. the lender picks it up, and because of that, you're getting a slightly better interest rate on a 25-year amortization. So we are here to help. Contact me. My contact information is below. I would love to chat with you, schedule an appointment, or reach out. Thanks so much. Have a great day.